after the summary of your loan terms, and we talked about it being fixed. Now, right now, with at the time of this recording, mortgage rates are so very low that for the most part, it is important that we understand that most consumers are going to see a fixed rate mortgage right now. That is usually what is happening. Now, this is really important. These are the best no's. The road to security is paved with no. And I'm going to explain what that means. This is the best part of this document, in my opinion, in explaining this to consumers. Even if you make your payments on time, can your loan balance rise? No. Can your interest rate rise if you're in a fixed mortgage? No. If you're in a variable mortgage, yes, and it'll give you the terms.
Yeah, and like this one, it shows what it would max out at and when the first adjustment will be.
Yeah. Even if you make your payments on time, can your monthly amount owed for principal and interest and any mortgage insurance rise? See, that's a great thing, because what they're talking about, even if you make it on time, can your monthly amount owed for principal and interest rise? See, this is in the amount owed. This also could refer to something called a negative amortization mortgage. A lot of those products have been pulled off the market, but they're still out there.
Or an adjustable rate.
Or an adjustable rate. But
yeah, they were, a lot of them, they call them pick-a-pay, MTA loans, very exotic mortgage products out there. These were real popular out the West Coast.
It's like a credit card. You could make a minimum payment on your mortgage.
You could do less. Here's the deal. You could make less than interest only. So after 5 years, you would owe more than when you started.
Yeah. Here's a couple more.
Those have actually been outlawed, basically.
Does your loan have a prepayment penalty? Which means if you do pay it off, do you owe the bank an extra fee?
If you pay it off in certain, usually typically 3 years was what you would see. Yeah.
Or does your loan have a balloon payment? What's a balloon payment? That's not where you actually mail your money in a like a Mylar balloon. A balloon payment is that's my best attempt.
I like it.
Okay, so a balloon payment is actually where the bank says, okay, you make your payment, make your payment, make your payment, make your payment. Wake up 3 years and 1 day. By the way, the balance is due on your loan, or a large sum.
Right.
Yeah.
And this is very good, an intent behind this, because I can tell you a couple. I'm not going to name the financial institution, of course, but in particular one, I ran into 2 different individuals when I was refinancing. They had no clue until we were refinancing. They discovered they had a balloon. They thought they were in a fixed rate mortgage, and it was fixed for like 3 or 5 years or whatever it was. So, and that's the intent behind this. And this, you can't get around that. It has to clearly show you, yes, you know, it is not, it is or it is not a balloon.
Okay, here, let's move on to the next section. I love this part of the good faith estimate. This is so exciting. Your origination charges. Oh, I forgot the camera's on.
Yeah.
Your origination charges. This is so cool. Origination
Box
charges.
Box A and B.
Box A and B. I always tell this up to customers. When you see the word origination charge, why don't we as an industry get together and call it what it is, commission?
Yeah, or fees, or whatever. It's part of the bank's profit.
Call it what it is.
I mean, it's part of the bank's profit.
It should be called commission, because usually loan originators in some fashion are compensated on that. Or
well, that's about to change, though.
Yeah,
but with the new law.
But they should have called it commission.
Right.
You know, because here's the reality. If you give somebody a good value and they like what they're getting and it's worth it, they understand that you don't wear a red cross on your back and go to work every day. They understand that the bank has to make money and the bank pays you, and they either make it through raising the interest rate or fees.
That's right. And it's always, like I've talked about many times, it's always a balance. And this shows you where the market's at. It's a balance between interest rate and cost. This rate is in the 3s at the time of this recording. This is a no-cost loan.
Yeah.
The bank's not charging. We're actually crediting back money for appraisal and title, and it's in the 3s on an ARM. It costs the borrower nothing to restructure their debt. So,
all right, let's move on.
Go ahead.
We've talked about the most important things, and in that origination charge will be basically money the bank keeps. Okay.
Keep going.
Okay. Money the bank keeps. We're down to 2 minutes.
Down to 2 minutes. It's still recording.
The next part of this that I think is also as important, it's going to talk about third-party fees. Fees that you owe someone else. This could be title insurance. This could be appraisal, credit reports.
Mortgage insurance premiums, upfront mortgage insurance premiums.
All the things that are attached to getting your loan that the bank isn't necessarily keeping, but you have to have it. And then we're going to fly through this next section, and this is something that I want to heat.
Are you on page? You've already covered page 2.
I'm on it, dude.
Well, prepaid interest and such. Well, I was going to say your adjusted origination charges. Well, go ahead. That's fine.
Well, I'm just saying that, you know, I don't know if I want to break down you know, because there's so many different variables that go on it. I want to give the last part, which I think is really important.
Okay.
Which is the instruction page on the last is a shopping cart, which lets you, the consumer, lay out different loan options side by side.
And we'll talk about that in the next segment. There are very good intentions behind this, but I think it falls short in some places. But we'll get to that.
Yeah, I mean, we're down to a minute left.
501-291-3190. Call us 24 hours a day.
Get our podcast on iTunes.
That's right.
You can You can get us on Twitter, LinkedIn, Facebook.
Become a fan on
Brain,
Facebook. We're shooting for 100. We're getting there. 100,000. We're a few short, but of our $100,000 goal. But you can go over and to our Facebook fan page and make that happen. Again, call us 24 hours a day, 501-291-3190. Let us know your thoughts, your questions, and that drives the content for this show. And you can always also email us at questions@familyhomeshow.com. And be on the lookout. We're working on the new website here in the next month or so. We're going to unveil it, and it's going to be a lot of great stuff.
Oh, that's going to be awesome.
Yeah.
I can't wait. You're listening to the Family Home Show. Stay with us. We'll be back right after the break.
Oh. Say bye, Heath.
Bye.